monthly maintenance, and minimum balance shortfall fees. You ever wonder why your free checking account has a monthly charge? Here's the twist. Many banks call it free until you trip a hidden wire. That's a flat monthly service fee, usually about $5 to $25, charged if you don't jump through waiver hoops. Didn't keep enough money in the account? No direct deposit last month? Maybe you missed swiping your debit card enough times. That's the hook. Then comes the bill. Sometimes slipping below the minimum, even just for one day, costs you the whole month's fee. At most banks, that's $60 to $300 disappearing a year just for breathing wrong. Maybe you think, I always meet the minimum. But if your paycheck's a day late or you have an emergency expense, suddenly the fee kicks in. And it gets worse. Some banks track your average daily balance. Others punish you for even a single dip. The fine print? It's written for accountants, not humans. Most people think they're safe if they never see the fee. Reality check. One off-cycle payment or surprise bill, and you forfeit the waiver for the entire month. This isn't about bad habits, it's about timing. The move: set up low balance alerts or politely ask for a one-time refund if you slip. Bank rules don't care about your plans. The waiver is a mousetrap baited with your own money. Out of network, ATM stacking, now you're paying for your own money twice. Picture this: you need cash fast, so you hit the nearest random ATM. One withdrawal, but two charges land. First, your own bank hits you with an out-of-network fee, usually $2.50 to $5. Then, the ATM operator tacks on a surcharge, typically $3 to $7. Sometimes there's an extra foreign network charge, or a percentage fee if you're really unlucky. Ever pull $40 and get dinged $6 in combined fees? That's a 15% access tax just to grab lunch money. The punchline: you see the operator's fee on the machine screen, but your bank's fee? That shows up hidden on your statement later. Most people think it's just a small convenience fee, but 2 hits equals real pain. Remember, they profit when you're desperate. Your move: use your own bank's ATM locator or get cash back at checkout for free. Grabbing cash should not feel like playing whack-a-mole with your own wallet. The fastest withdrawal comes with the slowest regret: paper statement and mailed notice fees. Remember when getting bank mail felt official? Now, banks slap you with a $2 to $5 charge just for sending a paper statement. Want a copy of a canceled check or account document? That'll tack on $5 to $15 even for a single image. And here's the kicker: if your email bounces or you stop logging into online banking for a while, some banks switch you back to paper automatically. Surprise! Most folks assume mail is just part of the service. But when you toggle off e-statements or request any physical copies, you're opting into a monthly fee that creeps on your bill. The solution? Go digital, opt into e-statements, double-check your email, and save your annual records as PDFs. Paper isn't free, it's banking snail-mail tip jar. Excessive savings, withdrawal, and transfer fees. Think, savings accounts mean safe storage? Meet the rulebook trap. Even though the old federal rule, Regulation D, capped savings accounts to 6 transfers a month, that limit's been lifted. Yet many banks still enforce their own version and charge $5 to $15 per additional transfer if you exceed their internal limits. That covers things like online withdrawals, electronic ACH transfers. That's when you link bank accounts for moving money or using your debit card to pull from savings. Sometimes ATM or branch withdrawals dodge the fee, but not always. What's wild? If you keep triggering extra transfers, banks might convert your savings account to checking or even shut it down. People say, it's my money, I can move it however I want. The reality is, too many digital moves means the account's more expensive than you bargained for. The tip: keep a little buffer in checking or bundle transfers to avoid constant shuffling. Even safe money pays a toll if you cross the invisible line. Inactivity or dormancy fees? Here's a stealth charge: do nothing, and your balance fizzles out fee by fee. If your account sits idle for 6 to 24 months, no deposits, withdrawals, or even logging in, a monthly fee kicks in, usually $5 to $20, over and over until the balance drops to zero. Sometimes, after a while, your money's not just eaten by fees, it's cheated to the state. That's when the bank decides they can't reach you, so your cash takes a government detour into the state's unclaimed property office. People think, if I leave my money, it just sits there, But inactivity is its own penalty phase. This isn't about forgetting, it's about the setup. Solution? Why operates the stews, there us? Schedule one microtransaction per year, buy a pack of gum, log in, update your phone number to show you're still alive. A dormant account isn't free storage. It's a slow leak to nowhere. Overdraft protection transfer fees. It sounds safe, but the safety net isn't free. When you link your savings account or a credit line to checking for overdraft protection, you're expecting a cushion. But every time your balance drops and an automatic transfer kicks in to cover the shortfall, the bank charges $5 to $12 a pop. Sneaky? Sometimes a day has multiple transactions that each trigger a separate fee, or the bank's rules require moving at least $100 from savings, even if you only needed $7. Don't assume protection means zero cost. It just takes a smaller bite than a full overdraft charge. Most people hear protection and tune out the fine print. Each sweep is a mini toll booth. Want to keep your socks on? Ask if your bank consolidates same-day transfers into one fee, or consider switching to a bank that waives these transfer charges. The only thing worse than a fall is paying every time you hit the mat. Standard overdraft or paid item fees, this one's infamous for a reason. You swipe your debit card, mail a check, or have an automatic payment, but your balance is short. The bank steps in and pays it, then slaps you with a fee, usually $10 to $35 per item. Here's how the magic trick works. For debit overdrafts, banks have to get you permission to allow transactions to overdraft at all. But for checks and electronic payments like ACH auto bills, they'll often cover the payment and ding you for every single transaction that pushes your account negative. Got 5 small charges in one day? That's up to 5 separate fees, sometimes posted out of the order you made them. Some bank softens the blow with a grace threshold, let's say, under $5 overdrawn, no fee, but that's far from universal. Many assume the bank will just decline the charge. That's not always true. The moves: opt out of debit overdraft if you can live without last resort convenience. Set your bills so they hit after payday, not before. Real-time balance alerts help you see the train before it hits. An overdraft fee isn't a fine for being weak, it's the price of timing gone wrong. The warmth it gives is the warmth it takes. NSF, or non-sufficient funds fees, are like the anti-overdraft. This is what happens when a payment tries to clear, but the bank says no funds, no dice, and kicks it back unpaid. Most banks still charge $10 to $35 per NSF, though some have dropped this fee to $0. But don't cheer just yet. If your payment bounces, the merchant or payee might pile on their own return payment or late fees, typically $20 to $40 extra, sometimes higher if it's a big bill, like rent. One payment can spiral. Here's the brutal twist. Many businesses use representment. That means if the first try fails, they'll hit your account again automatically. If money isn't there, you get yet another NSF fee. It's the ultimate rinse-repeat penalty cycle. Common misconception: it's a one-time fee. The truth? The same transaction might cost you twice or more. If you're tight on funds, proactively call the biller to pause auto debits. Only rely on overdraft protection if it's cheaper than the fallout. NSF doesn't just stand for not enough funds, it's never see forgiveness. Extended overdraft or negative balance fees. This is where time starts multiplying your pain. Let's say you overdraw your account with a payment, then don't bring it back positive fast enough, usually within 3 to 5 days. Suddenly, the bank starts slapping you with another fee, $5 to $15 for every period it stays negative, sometimes daily until your balance is fixed or the account is closed. Some big banks have ended these zombie fees, but many haven't, especially at smaller outfits. And here's the trap. Weekends and holidays don't pause the meter, so being away Friday to Monday can mean racking up 3 extra charges you didn't even notice. People often think, I already paid the initial overdraft fee. That's it, right? Nope. Time is money, and in the red, it's money you owe. The safe move? Deposit anything you have ASAP or ask for a hardship pause if you're struggling. Don't gamble with the grace window. Auto pay after payday is your friend. A negative balance grows by the day, not by the dollar. The deeper you dig, the more they charge for the shovel. Return deposit item fees: when someone bounces a check to you and the ricochet lands in your wallet. You deposit a check, it clears your account, and you think, money in the bank! But behind the scenes, a check isn't truly final until the payer's bank sends the funds over and doesn't claw them back. If it bounces, bad account, stopped payment, insufficient funds, the money vanishes, and your bank often charges a $5 to $15 fee for the trouble. If you already spent that deposit, now your balance swings negative, and you might owe even more in overdraft or negative balance fees. With mobile deposits, add in extra risk, wrong endorsements, duplicate uploads, or smudged images can all cause returns. Many believe if the money's available, it's mine. Not always. The move here: wait for real clearance on big checks from people you don't know, or ask for digital payments with faster, more definite settlement. Depositing checks is like playing bounce pass roulette. Sometimes the ball hits you. Wire transfer fees and hidden FX spreads. You're sending money fast, but paying a price you rarely see up front. Domestic wire? That usually runs $15 to $35 outbound or $10 to $20 for incoming. Have an international payee? Now we're talking $30 to $65 or more just to send, and the bank often tucks in another 1% to 3% markup on the currency exchange on top of the published exchange rate. But here's the rabbit hole. When you send an international wire, your money may pass through 2 or 3 correspondent banks, each grabbing their own piece. The recipient gets less than you sent, and the real cost is tough to pin down. People say wires are instant and transparent, but the truth is, timing varies by country and routing, and the FX spread is almost never advertised bluntly. Want to save? For domestic transfers, use ACH, that's Automated Clearinghouse, the standard slow pay network, or apps like Zelle that move money with no fee. When wiring abroad, compare costs with specialized fintechs and always check the final amount in both currencies. Remember, this is education, not financial advice. With wires, the price tag is never just the fee, it's a disappearing act on your balance sheet. Free checking? Sure, until your wallet takes a vacation. Ever notice how banks pitch their accounts like a resort brochure, but the fine print is a list of poolside fees? Hidden fee number 8, the international double dip. Here's how your bank cashes in when you spend abroad. First, swipe your debit card in Paris or Tokyo. Your statement quietly balloons by a foreign transaction fee, usually around 1% to 3%. That's before you even see the exchange rate, which is rarely in your favor. Now, find yourself at a foreign ATM. You pull out 100 euros. Suddenly, 3 charges hit: your bank's international ATM fee, maybe $3 or $5, a local ATM surcharge, another $2 or more, and a network fee, typically 1% on the withdrawal. For a quick cash grab, you've lost $7 or more just for touching your own money. And it gets sneakier. Ever get the screen flashing, convert to US dollars? That's called dynamic currency conversion, or DCC. It sounds like a favor letting you see the withdrawal in dollars, but the rate's a tourist trap, sometimes 3% to 8% off the real rate. Say no, choose local currency every time. Takeaway? Withdrawing cash less often, opting for local currency, and using a travel-friendly card shrinks the bite. In banking, the most expensive souvenir is the one you never see coming. Ready for the sleeper fee that crushes retirement plans? Say hello to certificate of deposit penalties. They're as quiet as a library, fine, but a lot more expensive. Picture this: you lock $10,000 in a 5-year CD, chasing a tempting rate. Life throws you a curveball. Now you need your money before maturity. The bill? Most banks charge 3 to 12 months worth of interest as a penalty. That could eat the entire year's growth in one gulp. Some long-term CDs? They'll keep up to 24 months of interest, and if you haven't earned that much, they'll dip into your principal. That means you could walk away with less than what you put in. And here's another curve: open and close a bank account in under 6 months, and you might get hit with an early closure fee, typically $25 to $50, simply for leaving too soon. The small print calls it a maintenance recapture, but it's really just bank speak for "we bet you wouldn't read the exit rules." A lot of people think, if rates jump, I'll just break the CD, no sweat. Not so fast. Those penalties can turn your smart move into a wash or a loss. Want to dodge this trap? Check for no penalty CD options, stagger your terms with a CD ladder, and always read the actual penalty chart. When it comes to CDs, the warmth it gives is the warmth it takes.